Senior Portfolio Manager Keith Buchanan, $3 billion in assets under management. You also like toys, don't you?
Yes, and thanks for having me again, Liz. We like durable stories right now, and we feel like that's where the market's going. Considering the changes over the past 3 months of trading, that really the market is striving for more hard goods, more durability instead of the hype, frankly, that's pushed the market higher up to that point.
Okay, but the toys that you like, because we just got this big ruling, it may or may not affect these companies. Hasbro is your pick. Why Hasbro?
Sure. Hasbro is a classic mispriced value story that is not necessarily dependent on hyper growth. They have more of their value is tied up in the brands they own, and also not just the code. And it's less exposed to AI-driven disintermediation. It's really just a core holding of ours, and our value strategy, we feel like adds a lot of value to what our clients can attain.
Yeah, for those of you who don't know, Hasbro is short for Hassenfeld Brothers. They were the founders way back in the day. G.I. Joe was their big one. So give me a sense, if you could, what you think about the markets right now with the Federal Reserve not expected to touch rates at least until June.
Liz, we've been waiting on this moment where the market shifted its focus from the Federal Reserve, a lot of them more macro forces behind the market, and get back to just understanding and appreciating what's driving revenue, what's driving cash flow, what's driving returns among equities. And that's where we've been positioning ourselves over the past year and a half, as we've been pulling away from large cap growth that was carrying a lot of the hype, a lot of the market cap, frankly, of some of the large indices, and getting more positioned to be diversified enough to appreciate a stock pickers driven market, which we feel like we've gotten into since November. And some of the disintermediation fears have value growth, have appreciated the value of the marketplace. Well as those that deliver hard goods, services that can't, again, be pushed aside by AI advancement, which we feel like is a real phenomenon. We want to make sure that we're diversified enough to have our hands in a couple of different pots in order to achieve the returns our clients demand.
Yeah, some people got in a little too deep. They are over-invested in that case, and it becomes a bit of a worry. I think your words of advice are important. Keith, it's good to see you. Thank you so much.
Good to see you, Liz.